హలో, ఎలా ఉన్నారు? సో మనం ప్రీవియస్ వీడియోలో రిటైర్మెంట్ సంబంధించిన ఎంట్రీస్ ఏంటి, వాటిని ఎలాగా నేర్చుకోవాలి, గుర్తుంచుకోవాలి అనేది తెలుసుకున్నాం. లైక్ జనరల్ రిజర్వ్ కానీ, ప్రాఫిట్ లాస్ అకౌంట్ కానీ డిస్ట్రిబ్యూట్ చేస్తే ఎంట్రీ ఏంటి, అట్లనే అసెట్ వాల్యూ, లయబిలిటీ వాల్యూస్ రీవాల్యూ చేసినప్పుడు ఎంట్రీస్ ఏంటి, ఓకే, గుడ్ విల్ ఒక ట్రీట్మెంట్ ఏంటి, గుడ్ విల్ రైజ్, గుడ్ విల్ రిటర్న్ ఆఫ్, ఈ ఎంట్రీస్ ఏంటి అనేది తెలుసుకున్నాం. సో ఇప్పుడు రిటైర్మెంట్లో అవే ఎంట్రీస్ని యూటిలైజ్ చేస్తూ ఎంట్రీస్ ఎలా పోస్ట్ చేయాలి, బ్యాలెన్స్ షీట్ ఎట్లా ఫైనాన్స్ చేయాలి అనేది ఇప్పుడు ఈరోజు ఈ వీడియోలో తెలుసుకున్నాం మనం. ఓకేనా? సో లెట్స్ గెట్ ఇన్ టు ద ప్రాబ్లం రిలేట్ టు రిటైర్మెంట్ ఆఫ్ ఎ పార్ట్నర్. ఓకే. Ajay, Vijay, and Vinay are partners, sharing profit and losses in the ratio 5:3:2. Their balance sheet as on 31st March 2020 was as under. This is balance sheet. Okay. Next, adjustments for Ichadu. Vinay retires on the above date with the following conditions. Goodwill of the firm valued 50,000, machinery to be depreciated, buildings are to be depreciated, and provision to be created for bad debts. Okay. And for the purpose of payment to the retiring partner, Ajay and Vijay, existing partners, are bringing 25,500, 19,300 respectively to pay off the retiring partner due amount. So considering all this, we have to pass the entries and prepare the necessary ledger accounts and closing balance sheet. Okay. So we didn't consider just the problem and solve చేయాలి. ఫస్ట్ మనం నేర్చుకున్న దాని ప్రకారం బ్యాలెన్స్ షీట్లో కనుక ఏదైనా రిజర్వ్, పిఎన్ఎల్ అకౌంట్ బ్యాలెన్స్ ఉంటే వాటిని డిస్ట్రిబ్యూట్ చేసేయాలి. ఓకే. సో వీ హ్యావ్ టు డిస్ట్రిబ్యూట్ ఇట్ టు ద ఎగ్జిస్టింగ్ పార్ట్నర్స్. దట్ ఈస్ ఆల్ ద పార్ట్నర్స్ ఇంక్లూడింగ్ ద వన్ రిటైరింగ్. ఇది కాకుండా ప్రాబ్లంలో ఏవైతే బ్యాలెన్స్ అడ్జస్ట్మెంట్స్ ఎఫెక్ట్ అయ్యేటుంటున్నాయో వాటిని కూడా మార్క్ చేసుకోవాలి. ఎందుకంటే బ్యాలెన్స్ షీట్లో వాటిని ఇన్నర్ కాలంలో కన్సిడర్ చేయాల్సి ఉంటుంది. రైట్. సో ఇక్కడ గుడ్ విల్ ఆఫ్ ది ఫర్మ్ వాల్యూడ్ ఎట్ 50,000. సో గుడ్ విల్ అడ్జస్ట్మెంట్ ఉంది, మార్క్ చేసుకోండి. మిషనరీ టు బి డిప్రిసియేటెడ్ బై 10% అడ్జస్ట్మెంట్ ఉంది, మార్క్ చేసుకోవాలి. బిల్డింగ్స్ ఆర్ టు బి డిప్రిసియేటెడ్ బై 20% అడ్జస్ట్మెంట్, మార్కెట్. ఇది కాకుండా create provision for bad debts at ₹1,000. So adjustment related to sundry debtors, market. Ajay and Vinay brings in cash ₹25,500. So cash kuda adjustment undi, market. That's it. సో ఈ అడ్జస్ట్మెంట్ ఉన్నటువంటి బ్యాలెన్సెస్ని బ్యాలెన్స్ షీట్లో కన్సిడర్ చేసేటప్పుడు ఇన్నర్ కాలం రాయాలి, లేదంటే రెస్పెక్టివ్ లెడ్జర్ అకౌంట్స్లో కన్సిడర్ చేసినట్లయితే అవసరం లేదు. ఇది కాకుండా సో ఇప్పుడు అడ్జస్ట్మెంట్స్ మార్క్ చేసుకున్నాం కదా, లెట్ us బిగిన్ ద ప్రాబ్లం. రైట్. సో ఫస్ట్ రెలవెంట్ ఎంట్రీస్ అన్ని పోస్ట్ చేద్దాం. రైట్. సో జనరల్ రిజర్వ్ ఏదైతే ఉందో దాన్ని డిస్ట్రిబ్యూట్ చేయాలి అమాంగ్ all the partners including the retire in the ratio 5:3:2. Therefore 24,000 distributed. When general reserve distributed, entry general reserve account debit in the ratio 5:3:2. Okay. So 12,000 5/10 is equal to 24,000 into 3/10 is equal to 24,000 into 2/10, and to Vinay capital account 4,800. Goodwill of the firm is valued at 50,000. So when goodwill of the firm is valued at 50,000, goodwill raised 50,000, కానీ ఆల్రెడీ బ్యాలెన్స్ షీట్లో గుడ్విల్ 10,000. సో మనం మిగతా 40,000 మాత్రమే గుడ్విల్ని క్రియేట్ చేయాల్సి ఉంటుంది. ఓకే. సో వెన్ goodwill raised for 50,000 minus existing balance 10,000, that is 40,000. entry goodwill account debit to all partners, to Ajay, to Vijay, and to Vinay. Okay. So goodwill మొత్తం ఎంత రేస్ చేయాలి? 4. 12,000, 8,000. Goodwill written off చేయాలని లేదు. నెక్స్ట్ మిషనరీ టు బి డిప్రిసియేటెడ్ బై 10%. సో మిషనరీ వాల్యూ డిప్రిసియేట్ చేస్తున్నాడు. సో మిషనరీ ఇక్కడ 50,000 ఉంది, డిప్రిసియేటెడ్ బై 10%. సో వెన్ అసెట్ వాల్యూ డిప్రిసియేటెడ్, ఇట్ బికమ్స్ reduced, its value gets reduced, right? So when asset value reduces, when asset value decreases, entries నేర్చుకున్నాం కదా, when asset value decreases, on revaluation, when asset value decreases, revaluation account debit to asset account. Okay, so entry machinery is to be depreciated, revaluation to asset account, that is revaluation account debit to machinery account, 10%. So 5,000 building to be appreciated by 20%. So when asset value increases, asset account debit to revaluation account, that is building account debit to revaluation account, 20%. So 55,000 into 20% is equal to 11,000. Next, create provision for bad debts at 1,000. So when we create provision for bad debts, that is sundry debtors balance will come down. That means asset value is coming down. So when asset value decreases, revaluation account debit to asset account. So when provision created for bad debts, at here revaluation account debit to the asset coming down is debtors. So revaluation account debit to sundry debtors account. Next, Ajay and Vinay brings in cash rupees 25,500 and 19,200 towards additional capital. Okay, so additional capital brought in by Ajay and Vinay. So when capital brought in, entry cash account debit to Ajay capital account and to Vijay account. 25,000, what's the amount? 25,500 and 19,300. So total capital brought in by both persons is 44,800. So these are the entries as per the adjustments given in the problem. Okay, so let's post these entries into the respective ledger accounts and balance sheet now. Right, so what are ledger accounts required? General reserve account, partners capital account, goodwill account, next revaluation account, and cash account, and partners capital account. So all the relevant ledger accounts I had created it here. That is revaluation account, general reserve account. Of course, there is no P&L balance, so this account is not in use. Goodwill account, cash account, and partners capital account. The partners are Ajay, Vijay, and Vinay. Ajay, Vijay, and Vinay. Okay, so these are the ledger accounts. Before posting these ledger accounts, that is general entries into ledger accounts, first we have to transfer all the balances given in balance sheet into their respective ledger accounts or into the new balance sheet. So creditors So what all will come in ledger account are in inner columns, the one which are marked. Why they are marked? Because there are relevant adjustments given with respect to these balances, asset balances and liability balances. So other than those which are marked, remaining all should be written directly in outer column. Okay, so when there is specific ledger account existing for any of the given balances, we have to post the balances in the respective ledger accounts. If not, directly into the closing balance sheet. So creditors, we haven't marked it, which means it's not having an adjustment. Directly we consider in the new balance sheet at liability side 20,000. So creditors. $20,000. Okay, next, bills payable 26,000. Not marked, no adjustment, directly into new balance sheet 26,000. Right. Next, general reserve 24,000. We had marked it, it's having an entry, and we have opened ledger account for it. Therefore, this balance, instead of into the balance sheet, we have to consider its respective ledger account. So in general ledger of general reserve, we have to write 24,000 at a credit side because it is given at liability side. All liabilities are credit balances. So in general reserve account, 24,000 by balance brought down. 24,000. Okay. Next is capitals given at liability side. We had opened ledger account for all the capitals. Therefore, in ledger account, being its liability, we have to consider credit side 60,000, 40,000, 30,000. So in capital by balance brought down. Next, coming to balance sheet asset side, cash at bank, we had opened a cash account. So in cash account, being it asset, we had considered debit side 5,000. In cash account, to balance brought down 5,000. Next, sundry debtors. Okay, so for these assets, we haven't opened ledger account. Therefore, in closing balance sheet, being it's having adjustment, right in inner column, sundry debtors 40,000. We have marked it, indicating it's having adjustment. Therefore, write it in inner column, sundry debtors. Next, stock 30,000, furniture 10,000, not having adjustment. We can directly write at outer column, stock 30,000, furniture 10,000. Over. As it's not, these balances are not having adjustment, we have written directly at outer column. Next, machinery 50,000, buildings 55,000 are marked having adjustment. Therefore, these balances are to be written in inner column. Machinery buildings 55,000. Machinery 50,000 having adjustment, right in inner column. Right. Next, goodwill. Okay, we have opened goodwill account. Therefore, in goodwill, being it an asset, it is a debit balance. So at debit side, two balance brought down in goodwill account. $10,000. Right. So important point is whatever the balance is given in balance sheet will be posted to only one place. If it is at liability, this balance will come either in ledger account or in closing balance sheet at credit side. But whereas if it is an asset, it may come in the respective ledger account at debit side, if not in the new balance sheet asset side. So all the balance given in balance sheet are to be posted to only one place. Now coming to adjustments, for these adjustments, we have given general entries, we have posted entries. For every adjustment, we have to give and satisfy dual effect, that is debit effect and credit effect. So let's see how the entries are be posted utilizing double effect. Now let us post this first entry, general reserve to capital account, 24,000, and in Ajay 12,000, Vijay 7,200, Vinay 4,800. So in general reserve to capital. To Ajay capital, to Vijay capital, and to Vinay capital. Okay. Amount is 7,000, 12,000, 7,200, and 4,800. Okay. So in general reserve to capital completed debit effect. Further, we have to give credit effect. So in capital by general reserve. Okay. So in capital by general reserve completed credit effect, and in general reserve to capital completed debit effect. So debit and credit effects completed. Now enter into next entry. When goodwill raised, we have created raised goodwill only for 40,000 because in balance sheet already this balance of 10,000 and total valued goodwill is 50,000. So only for the remaining balance we have to raise goodwill. So when goodwill raised, goodwill account debit to capital account. So how to post these entries into satisfying double effect? In goodwill, write to capital, and in capital, write by goodwill. So in goodwill to capital. In goodwill to J capital to Vijay capital to Vinay capital. Okay, Ajay capital 20,000, Vijay capital 12,000 and 8,000. Okay, so in goodwill to capital and in capital by goodwill. So in capital by goodwill completed credit effect. Okay, and in goodwill to capital completed debit effect. So both debit and credit effects got completed. Next, revaluation to machinery. So in revaluation to machinery, in revaluation account to machinery, 5,000 completed debit effect. Further, we have to give credit effect. That is, in balance sheet, machinery is there at asset side, that is debit side, but we have to give credit effect. So at debit side, if you want to give credit effect, we have to deduct, that is less depreciation amount 5,000. Okay, so how, just to confirm whether both effects got completed or not, this is asset side, which is debit side. We are deducting depreciation less. Less means completed or opposite effect, that is credit effect completed. Further, debit effect at debit side of revaluation account. So both debit and credit effects completed. Now next entry, that is buildings account debit to revaluation account, right? So in revaluation by building, in revaluation by building, amount 11,000. So in revaluation, we have written by building, completed credit effect. Further, debit effect. So debit effect at debit side of balance sheet, that is asset side, buildings, add amount 11,000. So this is debit side, assets is debit side. We are adding means completed same effect, that is debit effect completed. Further credit effect, okay, that is in revaluation account at credit side by buildings 11,000. Okay, next revaluation account to debtors 1,000. So in revaluation to debtors, completed debit effect. Further credit effect in balance sheet, sundry debtors is at debit side, but we have to give credit effect. Therefore, less provision for bad debts amount 1,000. Okay, so assets is debit side less means completed, opposite that is credit effect completed. Further debit effect at debit side of revaluation account. Over. Next. Next is cash account debit to Ajay capital account to Vijay capital account. So in cash to Ajay to Vijay, and in Ajay Vijay capital account by cash. Okay, so in cash to Ajay's capital account and to Vijay's capital account. So in cash to capital, completed debit effect, further credit effect, in capital by cash. In Ajay's capital account 25,500 and Vijay's capital account 19,300. Okay. In capital by cash, credit effect, and in cash to capital, debit effect. Over. Next. Are there any more entries? Over. So we have completed posting the entries into respective ledger accounts and balance sheet. Now close one by one account. Okay. So first to close the revaluation account. Credit side total is more 11,000. Take the same total 11,000 minus 6,000. So difference is 5,000. This is to be distributed among all the partners. That is to Ajay capital. Okay. Amount is 5:3:2. So 2,500 to Vijay capital and to Vinay capital. Okay. So from 11,000 after deducting 6,000, we got profit of 5,000, which is distributed in the ratio 5:3:2. That is 5,000 into 5 by 10, 3 by 10, and 2 by 10, which is equal to 2,500, 1,500, and 1,000. So in revaluation to capital, therefore in capital by revaluation. Ajay's capital account 2,500, Vijay's capital account 1,500, and Vinay's capital account 1,000. Okay. Next, after revaluation account close, general reserve account. Credit side total is 24,000, debit side total is 24,000. So account got tallied, no carried down, no brought down. Therefore, in balance sheet nil. Profit and loss account, there are no balances. In goodwill account, altogether this is equal to 50,000. So take the same total on other side, 50,000. Okay. So by balance carried down. Amount 50,000. Okay. So in goodwill, by balance carried down, completed credit effect, further debit effect. So balance sheet debit side, goodwill 50,000. Okay. So balance sheet asset side, that is debit side, completed debit effect and credit effect in goodwill account, by balance carried down 50,000. Okay. Next, close cash account 49,800. Take the same total 49,800. By balance carried on. So we have closed revaluation account, general reserve account, goodwill account. Okay, it got tallied. Now next comes cash account. So normally what we do by closing cash account 49,800, whatever is the balance, that will be carried forward to asset side. Okay, but in this problem, we have to close the capital account at first, because in adjustments, it is clearly stated that whatever the amount due to Vinay is there, that has been settled by paying the cash. Okay, to pay cash, Ajay and Vijay are bringing the required amount of cash. Okay, therefore it is understood whoever returning to him, cash is paid to settle his account. That means first we have to close his capital account to find out what is the balance. Okay, so let's close capital accounts at first. So 1,20,000, 1,20,000. Here Vijay 80,000 and Vinay 43,000. So two balance carried on. Carried down 1,20,000. Okay, and 80,000. Right. So Ajay and Vijay are existing partners. Their balance will be transferred to balance sheet as capital account. So first let us do this and later come to retiring partners account. Here we completed debit effect, further credit effect at liability side, Ajay's capital account and Vijay's capital account. $1,20,000 and Vijay's capital account. Amount 80,000. Okay. So if under normal circumstances, if the payment is not settled of the retiring partner, whatever is there as his balance 43,800, we'll write to Vinay's loan account 43,800. Sorry. Completing debit affected here and credit affected liability side, Vinay's loan account. $43,800. Okay, this is the normal process what we have to do. When this particular adjustment of settlement is not there. Okay. But in this problem, it is specifically stated that the amount, whatever is there of retiring partner, has been settled by paying cash. Therefore, instead of writing the amount to his loan account, okay, we have to write to cash amount 43,800 in cash by Vinay 43,800. Okay. Therefore, you should not write this at here. Leave this. Now, see whether we completed both the effects. When we close Vinay account to cash 43,800 have completed credit effect, and in cash by Vinay 43,800 credit effect. Now close cash account and find what is the balance. 49,800 minus 43,800 is equal to 6,000. By balance carried down 6,000. Completed credit effect. Further debit effect. That is a debit side of balance sheet. Cash 6,000. Cash 6,000. Okay. So all the ledger accounts has been closed. Revaluation account, general reserve account, goodwill account, cash account, and capital account. Now come to balance sheet. Bring all inner columns outer side and close the balance sheet. 40,000 minus 1,000, 39,000. 50,000 minus 5,000, 45,000. 55 plus 11, 66,000. Appreciation at goodwill cash. Okay. Now take the total of liabilities and assets side, which is equal to 2,46,000, 2,46,000. Okay. That's how we have to close. Okay. So what is the important point at here? Whoever is their retiring partner, we are not transferring his balance to his loan account because it is specifically stated the amount has been settled by Ajay and Vijay by bringing additional amount of capital. So whatever the balancing fee is there in Vinay's capital account, that will be transferred to cash account. So in Vinay to cash and in cash by Vinay. Then whatever the balance is there in cash account, that will be transferred to asset side. After closing, we got the balance sheet tallied as 2,46,000. Okay. Hope you understood in attempting the problem with the adjustments and the additional entries.